Hello everybody, I'm James Child, I'm Head of Research at EG, and I'm really pleased you've been able to join us for this very short video today in which we plan to showcase and really highlight the complexity of the UK's retail real estate market and the relationship between landlord and tenant, which has increasingly been under the microscope in the weeks and months that have elapsed during this ongoing pandemic. And in particular, we'd like to share with you some exclusive research based on the makeup of ownership of retail in the UK. Now, during these rather unprecedented times, government has of course been forced to act. At EG, we've been covering all of the vital news that the industry needs and wants to hear. Last week, the news broke that government has banned landlords from making statutory demands against companies unable to pay rental arrears during the coronavirus. The new legislation is going to be enforced until 30th June and may be extended in line with moratorium on commercial lease forfeiture. And these measures are to crack down on landlords in favour of supporting retailers during this crisis will ultimately and in a roundabout way hit the financial well-being of the individual man on the street or the individual woman on the street. Now, banning landlords from enforcing payment or issuing winding up orders, which are intended to hit big corporates and protect the economy, protect our jobs and protect individuals, of course, is actually going to have the opposite effect according to EG data. Now, to understand this in depth and highlight exactly who's exposed, we've analysed the UK's retail footprint in a level of detail which has not been seen before. Now, this simple chart paints a fairly accurate picture of the size of retail real estate in the UK. There's an estimated 1.5 billion square foot of retail and F&B space that calls the UK home. Of that, a whopping 80% of that can be found on what we define as traditional high street space. The rest of that space comes in the shape of shopping centres, retail parks and those other less abundant schemes, and you can see those at that bottom of the bar chart. We use Radius Data Exchange and some other sources to build up an expert's understanding of who owns these buildings and and where they're from, and we've managed to capture 90% of all scheme ownership data for those shopping schemes, whilst analysing the 22 busiest UK high streets as well. We believe that this is the strongest, most accurate and most in-depth data set currently available that paints a real picture of ownership in this country, and we'd like to share that with you. Now, for the purpose of this analysis, we've bracketed ownership types into 4 distinct broad categories. And it's important for clarity and transparency that I do touch on what they are. So first up, we've got public sector and charities. We define that as traditional estates, private individuals. We've got institutional investors, which includes investment management schemes and institutions. We've got propcos and the overseas investors, and that also includes owner-occupiers, so tenants who own their own space, and then traditional REITs, or real estate investment trusts, of which around 60% of their investor base is actually built up through public money, directly or indirectly through pensions, mutual funds, and private brokers. And if then we assume that 3 of these 4 categories are largely owned by UK public, the public sector, the institutional investors, and 60% of the REITs. And what I'm going to do is I'm going to illustrate that fact a little better to you by looking at some data which has been supplied by Thomson Reuters. And what we have here is a list of 9 of the top UK REITs, but the bar on the left hand side is the one which you want to focus on really. It's the average all of the 9. And you can see there in dark blue the share of ownership of pensions, of private funds and private brokers, as I mentioned before, which command almost 60% of that entire share of ownership. If we break that down one layer more, we see another interesting story beginning to emerge. And again, across those 9 REITs, data shows that government pension funds make up on average the largest share. You can see again in light blue. So, an awful lot of government funds, government money, our money, is quietly masquerading, I guess, within the financial makeup of these companies. And in many respects, then, this is the first example of how the public's purse is at risk with these governments, with their current plans, the government's current plans, to effectively, freeze landlords' ability to recuperate rents. Now, the big UK REITs are more commonly known for their ownership of the country's largest shopping scheme. So I guess that's probably a good place to start our more granular analysis. If you remember that first slide I showed you, you saw that large retail schemes make up approximately 1/5 of the UK's retail footprint, alongside high streets, which make up the other 80%. Using the same methodology that we've been using throughout, we've been able to identify that between 60 and 70% of shopping centres, retail parks, factory outlets, and shopping parks stock is actually under the direct or indirect ownership of the UK public through investment vehicles. And just to remind you again one more time, I will keep to this colour system throughout. Public sector in yellow, institutional investors in grey, and then the REITs, of which we're interested in that 60% share in orange as well. And what we can do, we can go further than that. We can isolate these scheme types within the data as well. So, at first glance, there's not a huge amount of variance here, but it is worth noting that shopping centres, of which 59% is owned by the public, slightly less than some of the others, but not really surprising given the fact that overseas investors, sovereign wealth funds, are actually more interested in buying up those big shiny malls, given the historic returns on yields. 70% of retail parks are owned by UK public, again directly or indirectly, and they're of course favoured more by the traditional institutional investors. Now we can apply these same standards again to the high street data that we've analysed, and again by a matter of transparency, it's worth mentioning again that this study in isolation consisted of 22 of the UK's busiest high streets across key cities, so London, Nottingham, Cardiff, Edinburgh, Newcastle, Manchester. There's lots in there and I won't go through them all, but they are based on population density, based on footfall, and it accounts for well over 3,000 individual stores. Now, whilst this chart probably looks fairly similar to the previous one, it's my belief inherently that it's more important. And the reason for that is because we saw from that first slide, if we go back, that 80% of all retail real estate can be found on high streets. That combines to 1.2 billion square foot of space. Now, if we extrapolate our data set nationally, what we can anticipate is that an even greater amount of that space will be owned by the public purse. That's because we're more likely to see a suppressed level of investment from overseas investors, from sovereign wealth funds, for example, in those regional destinations, especially more so than we are in those more sought after retail thoroughfares in city centres. So back to this chart one more time, and as I said, if we extrapolate our high street analysis nationwide, we consider that footprint is 1.2 billion square foot. 80% of that space comes on high streets. We do the figures. We really think that 900 million square foot of all retail real estate is therefore directly or indirectly owned by the public purse, and that's a whopping 6 out of 10 stores. Now, this research so far has really highlighted how crucial it is for those in government to really fully understand the full complexities of real estate ownership. And that's why we are calling for a joint call to action. So EG is calling for a rethink on the temporary ban on statutory demands and winding up petitions announced by Alok Sharma last week, and stands by the British Property Federation, stands by Revo, and stands by the British Retail Consortium on its proposals to implement a furloughed space grant scheme, where the state would cover the fixed cost of businesses that have experienced dramatic falls in turnover. Under the proposals, eligible businesses would submit an audited forecast for the expected loss in turnover during the lockdown period from 24th March, as well as the details of the fixed property costs, which would obviously include things like service charge and rent. The government would then meet its cost on a sliding scale basis. So this means 25% of the cost would be paid by government for a decrease in turnover between 40 and 60%, 50%, 80%, and then finally through to 100% where business isn't trading at all. So businesses, property owners would agree between them then how to deal with any shortfalls between the government's contribution and the property costs payable facilitated by the lenders. Thanks for tuning in. If you do have any questions, do get in touch. EG will be hosting a special podcast next week with key industry leaders to discuss this issue in further detail. Really looking forward to that. In the meantime, if you'd like to post some questions for the debate or share your thoughts, then please do get in touch with our EG editor Sam McClary on samantha.mcclary@egi.co.uk. Thanks for tuning in.